Welcome back. Well, Maharashtra seamless, that's a stock on our radar. It's corrected close to 40% from the 52-week high. The company reported improved performance in the past quarter. But how are things shaping up? The order book is something that the street is looking forward to. And the promoter entity as well has been buying some shares in the open market. We have with us Mr. Kaushal Bengani, who joins us on the show. Hi, Kaushal. Thanks a lot for joining in. Well, let's get a couple of details first out of the way. We have your total order book, which was roughly around 1,700 crores as of the past month. And normally, quarter four is when you see some increased ordering activity coming in, particularly from the oil and gas space. What is the updated number? And is there any ordering trends you're observing from ONGC and Oil India, which is better margin business?
Good morning, Nigel. Thank you for inviting us. On the order book, it is currently at 1,674 crores right now. There has been no change in the order book because we've been able to replenish whatever we've dispatched with fresh orders. You're right, more orders are expected in the current quarter. And I think towards the end of February or towards the first week of March, we should get some more new orders in, which would be beneficial for the company. And these would be from the oil and gas sector.
Okay, all right. The reason I ask you is because ONGC as well as Oil India as a percentage of your total order book has come down to around 34%, which is much lower than the 50-60% we have seen in the past. Do you want to hint at the total quantum of the orders that you could win towards the end of February as well as beginning of March?
The dip is more on account of a timing mismatch because the lumpiness in order inflow is always there. So in one go, we can get a large order and then there will not be any order for the next few months. That's the way the ordering position normally remains. And I think it is more on account of that rather than the average that we get for the entire year from our oil and gas customers.
Okay, all right. Let's get a couple of details and out of the way, and we'll wait by to hear from you in case there is an order win. What about the guidance on the EBITDA per ton front? I'm looking at the last quarter, the seamless pipes. Well, out there you had a good improvement. It was around 20,000 rupees, while the ERV was around 2,700 rupees, which is a smaller part of your business and continues to struggle. What's the guidance on both these two parameters? And also, what is the volume growth we should work with for both these two segments?
I'll take the volume growth first. In last financial year, we dispatched around 400,000 tons of seamless pipes. This year, in 9 months, we've dispatched 324,000 tons of seamless pipes. And we expect that we will dispatch around 435,000 tons of seamless pipes in the entire financial year, which gives a volume growth of around 7 to 8% on a financial year-on-year basis. Going forward in next financial year, we expect to dispatch around 4.5 lakh tons. The reason why I am giving that figure is because one unit is being revamped. One bottleneck was there, which we are working to resolve. And by December 25, it would be done. So because of the activation of that capacity, we expect an additional 15,000 tons in the last quarter of next financial year, bringing the guidance from 435,000 to 450,000 for financial year 26. The guidance for the next financial year would be more than that because once that finishing line installation and commissioning is completed in December 2025, then the entire benefit of the next financial year would be available and we would be able to dispatch, I think, around 500,000 tons in FY27. That is the growth guidance on the tonnage front. On margins, at the start of this financial year, I'd given a guidance of 15,000 rupees per ton for seamless pipes. Over the 9-month period that has concluded since then, we've achieved 16,500 rupees per ton. And going forward into the end of the year, I think we'll do more than 16,500 rupees per ton on an annual basis.
Okay, all right. So just to get these numbers correct, seamless at the end of this year, 435. At the end of FY26, 450,000. And FY27, around 5 lakh tons, correct?
That is correct.
And EBITDA per ton in seamless is 16,500 tons. 16,500 rupees.
Yes, 16,500 rupees for the entire financial year.
Okay, all right. And ERW, you want to quickly give us what you'll do? As of 9 months, you've done around 77,000 tons. How much will you do for the year?
I think ERW will do around 90,000 tons for the entire financial year.
Okay.
And margins are varying between 1,000 to 7,000 rupees per ton, depending on the price of the product which is being dispatched, because prices for oil sector products are different from that in the water sector. So it's more of a
Okay.
function of the product mix rather than anything else.
Okay, all right. Kaushal, I wanted to ask you about this cash in your books. Very good to see cash in your books, which is 30% of the market cap. But what are you all doing with it? Don't you think it would be more prudent to return that money back to the shareholder, give a dividend, do a buyback? I'm looking at the breakup. Most of it is going in mutual funds. And mutual funds, now they're subject to risk, right? I mean, why don't you all just return some of this cash back to the shareholders? What is the thought process?
I like your enthusiasm, Nigel, and we are working on it. So we have quadrupled the dividend which we paid in the past 3 financial
But it's
years, and
still
we've
very,
also
very
announced.
small. But it's still very, very small. It's very, very small. And it's not just my enthusiasm. If I look at your total institutional holding, which was much higher, that's come down. And that's predominantly because of this, sitting on cash and not returning it back to the shareholders. So by when can we hear some kind of a resolution with regard to this cash that you're sitting? Otherwise, it's just a valuation argument, which the shareholders are not getting.
That is correct. And to that effect, the promoter purchasing has also taken place, but that's a separate issue. As of now, we've announced a capital expenditure plan of 850 crores, which is commenced, and bit by bit, we are addressing each of those capital expenditure items. We don't have a dividend policy right now, but we'll just have to wait for the next board meeting in which dividend for the entire financial year would be announced, and we'll take feedback that you've given right now into
Okay.
account.
Okay, all right. And since you spoke about the promoter, he is buying from the open market, so that gives some kind of support. In the last few days, he's bought close to 5.5 lakh shares, and I recall, it's moved up from that 65, 67%. It's now at around 68.5%. Any targeted holding that the promoter wants to have in the company?
So promoter group have expressed their desire to raise up their promoter holding from current levels of 68% to 75%. And to that effect, in the past 6 to 7 years, they've improved the promoter holding, which was earlier at 60% to 68.07% as on 31st December. And in current quarter, they've purchased I believe around 7 lakh 50, 7 lakh 60,000 shares, which is around 0.56 or 0.57% of the total equity capital of the company. And we have received communication from promoters that they want to increase their stake going forward.
Okay, we'll leave it there and we look forward to hearing from you soon again. Thank you very much for joining us. Let's talk about